Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The worst performing stocks in the S&P 500 in the month of November include some surprises. When I looked this up, I was really shocked to see the companies that were on this list. So let's get into what the 5 worst performing stocks in the S&P 500 are and why they move so much during the month. Here's the list of 5 worst performing stocks. Let's start with Lincoln National. That is the worst performer of this list. And then you go to Lumen Technologies, Advanced Auto Parts. This is, I think, where the surprises really begin. Advanced Auto Parts has been a pretty steady operator, and you would think that doing things like retailing auto parts isn't going to be all that volatile of a business, but the stock was down 20% in the last month alone. So we'll have to dig into exactly what's going on there. And then you get to Tesla, down 14%, and it was down much more than that in the middle of the month. So there are some challenges for Tesla. I will link to another video that I did here that dug a little bit deeper into Tesla's numbers and some of the challenges that it faces towards the end of this year and then going into 2023. But I will go through some of the highlights here as well. And then the last one to look at is Dominion Energy. Again, a utility. You wouldn't think this would be a big mover, but it did drop sharply in the month of November. So let's get into these stocks. The first stock to talk about is Lincoln National. And what happened early in the quarter is the company reported earnings and they were really terrible. So there's no way around that. I'll go through a few of the highlights here. They reported a loss of $2.6 billion or $15.17 per share for the quarter. You can see here that this includes net unfavorable items of $2 billion or $11.62 per share related to the company's annual review of DAC and reserve assumptions. Now, Morgan Stanley downgraded the stock and says an outside charge from the company related to lower lapses in individual life insurance operations will weigh on investors' confidence going forward. So that's the reason for the big move there. Never want to see earnings that are that bad. That's a huge loss for the company. And so that is why the stock is down so much in the month of November. Lumen Technologies is another company that reported earnings this quarter. And again, they weren't what investors were expecting. Let's go through a few of the highlights. Total revenue was $4.4 billion, down from $4.9 billion a year ago. Now, the company did sell some assets and is acquiring others. Net income did increase slightly from $544 million to $578 million. Free cash flow plunged from a little over $1 billion a year ago to $278 million. So that was a big decline for the company. There's a lot of uncertainty going forward. They completed a $2.7 billion divestiture of the Latin American business to Stone Peak. Also completed the sale of its 20-site ILEC business to Apollo on October 3rd. That would be in the fourth quarter numbers. So we will see that impact in the fourth quarter. But this is just a company that's in flux right now, and investors don't quite know what to expect. I think that's a big reason that the stock is down. So maybe one to just keep an eye on and see if the company's long-term strategy, especially as a new CEO comes in, will play out as hoped. Advanced Auto Parts is the third company on the list, and this is a company that's really benefited from increased spending on automobiles in the last few years, but that could be reversing. The company said that net sales increased 0.8% to $2.6 billion in the third quarter of 2022, but comparable sales, and this is a key metric in the retail business, were down 0.7%. That's definitely not headed in the right direction, especially as a potential recession is looming on the horizon. The company is also opening more stores. They opened 37 new stores and branch locations in the quarter, so that could be taking away from sales at each individual store as it kind of dilutes the market. Management also updated guidance, and that's really where investors are focusing right now at the end of 2022. You can see here that sales are expected to be about what they thought they were going to be the last time the guidance was updated, but it's these earnings numbers that are going to be really important to watch. Adjusted earnings per share declined slightly to a range of $12.60 to $12.80. Also, that free cash flow number is pretty alarming, expecting a minimum of $700 million the last time the outlook was given in August, and now expecting only $300 million. So the business is clearly deteriorating pretty quickly, and that's why the stock was off so much in the month of November. Now, Tesla was an interesting one. This may not be one that you think about doing poorly in November, but there were a number of headwinds that I think caught investors' eyes. One is that interest rates continue to rise. Now, that should eventually have an impact on auto sales for companies, including Tesla. So we're kind of trying to read the tea leaves here. Do they have the demand to fill all of the supply that they're adding to the market? Remember that Tesla is expecting to increase production about 50% per year. That's what Elon Musk has said. So now you have to increase demand 50% a year as well. Well, recently we found out that the company is actually discounting vehicles if you will take delivery in the month of December. So that indicates that maybe Tesla's demand isn't quite what we would hope because they're resorting to discounting. These are things that automakers normally do when they want to reach sales goals at the end of a quarter, end of a year, but Tesla hasn't had to do those kinds of things in the past. So it's possible that the company is facing some headwinds. We also did see Elon Musk's acquisition of Twitter close that could impact Tesla's brand negatively, even though they're not technically related. So we will see what some of those impacts are, but investors were definitely selling Tesla in the month, maybe taking a little bit more of a cautious approach. Remember, this is still a very expensive stock, trading at 8.8 times sales right now. And that's well ahead of companies like Toyota, which is at 0.7 times sales, or General Motors and Ford, which are trading for 0.4 times sales. So still a very expensive auto stock. And if it hits some of the challenges that automakers typically hit on a cyclical basis, we could see the stock pull back further. The final stock on the list is Dominion Energy. And this one's interesting because you wouldn't think of a utility stock as the kind of stock that is going to be really volatile and one of the biggest movers in the market. But this one is in large part because results just simply aren't meeting expectations. You can see here that over the last 5 years, revenue is pretty stagnant and net income has not gone up all that much as well. Dominion Energy announced a top to bottom review of the business, said the lackluster performance was not acceptable in the third quarter earnings call, and no options are off the table. Now, given the stability of the company's operations, the utility business should be pretty stable long term. I think this could be a buying opportunity, especially as interest rates rise. Investors often will adjust the expectations and price of assets like stocks as interest rates increase. So that means that stock prices come down as interest rates go up. If you're willing to take a long-term view of a business like Dominion's, this could be a great buying opportunity. So I'm not as down on this stock maybe as the others. And the fact that the company is looking at their strategic alternatives means they may sell some underperforming assets or some assets that they can get a good price on while focusing on operations of the business. So this is probably the one of the 5 that I'm the most bullish on right now. What do you think of the month in review in November? Any of these stocks stick out to you? I thought a few of them were a little bit surprising, maybe telling about where we're going in the future, but we will have more earnings reports and obviously big stock moves coming up. So please subscribe to Rive Investing. I will be covering some of the market's big moves. Give this video a like and, of course, comment with anything you have to say below, and I will see you here next time.